Thank you again for joining us today for our session on credit. We're very excited to see many of you, and I love seeing a lot of familiar names as well. My name is Brian Drabick, and I'm Senior Associate Director of Financial Aid here at Northwestern, and I also help oversee our financial wellness program for the university. This is actually the third time we're putting on this session, and this is the most attendance we've had, so very excited. I'd also like to introduce Deb Gossman. She is the head of campus development for the Central States for College Avenue and will serve as our moderator today. So please be sure to add any questions that you have along the way into the chat. Deb will be monitoring those and we'll save some time at the end for those questions. And it's with great pleasure that I would like to introduce our speaker today, Veronica Herrera. She joined Experian in 2002 and has over 20 years experience working in depth with tri-bureau credit data and scoring models. In her current role as Director of Core Credit Services, Veronica works with data and scores to bring credit education and insights to consumers. Over the past 12 years, Veronica has helped educate thousands of consumers about credit reports and scores through the Experian Credit Ambassador Program. So Veronica, with that, I will hand it over to you, and thank you for joining us today.
Thank you so much for having me. This is great. I love doing this. So yeah, like Brian said, I've been working for Experian for a very, very long time. I've had various roles, but most recently I was a director inside of what we call the decision analytics team. And I was responsible for scores, credit data, and helping lenders, banks and credit unions and whatnot, helping them use all the credit data that's available so that they can make decisions, and having insight into how lenders actually make determinations, how do they decide who to approve and who to decline, or what interest rates to give, or what loans to issue. I figured, I kind of have a backdoor view into that. And I recently moved to a new division at Experian, which is the direct to consumer side. So I work now with with individuals as opposed to banks. And I wanted to take some of that knowledge, or a lot of that knowledge that I have about how lending and credit scoring and credit data works, and bring it to consumers. And that's one of the things that I enjoy of my job the most is that ability to let you guys in on what's actually happening kind of behind the scenes. So one thing I want to make sure, just kind of thumbs up or something. Can you guys all see the screen? It should say, give me a little credit, a little bit of a purple background. Awesome. All right, so let's go through it. I will tell you that this is going to be somewhat of an overview. So you don't need to know anything about credit to get going with what we're going to be talking about. I'm going to start off at the very beginning. So we're going to talk a little bit about, honestly, what is credit, right? Because a lot of people don't know what credit actually is. There's a lot of misinformation out there. And then we're going to talk about what a credit report is. Credit report is different than a credit score, but again, a lot of people tend to confuse them. So we're going to talk about what a credit report is, what's in your credit report, things like, how long does information stay on there, how are they created, things like that. And I'm also going to talk about scores. What is a credit score? How does it get its information? What do lenders do with that? Because this is a university, I'm going to be talking a lot about student loans as well. How do student loans impact lending decisions, your credit report, your credit score? Do they even count towards it? Things along those lines. Letting you know how your student loan, if you have one, is being impacted. Or is impacting your credit. And we're also going to be talking a little bit about why it's so important to have a good credit score. And of course, I could talk for hours and hours and hours about this topic, and I'll never, even scratch the surface. So I will also be giving you many different places where you can go, resources, where you can get more information, how you can pull your own credit report and get your credit score for free at any time. So also, this presentation, we PDF'd it. It will be available. So if you would like a copy of it, that way you write down everything. And there will be lots of links and things like that in this presentation. Okay. And we're also going to take some time at the end to answer your questions. Don't be shy. There are no dumb questions. There's a lot of misinformation out there. And if you've heard something that you're not quite sure about, this is a great place to kind of discuss that. get the right information. Let me just read this disclaimer. This is the standard legalese stuff that everyone has to say. The purpose of this presentation is to help you better understand credit reporting and to provide general information about how you can manage your credit report so you can get the credit that you need and want. For legal reasons, I cannot discuss issues specific to your personal credit report, and I cannot advise individuals on how to improve their personal credit report or credit scores, and I cannot submit disputes regarding your personal credit report on your behalf. Information regarding Experian policies and processes is current as of the date of this presentation, but may change. Basically, what it's saying is that I don't have access to your credit report. I cannot make changes. Nobody can just go in there and make changes. There is a standard process for updating and cleaning up your credit report, which we will discuss, by the way. We will discuss the dispute process today. But you know, I can't tell you, oh, you got to do this or this or this, because I don't have access to actually your credit report. But I'm going to show you how you can do it, how you can access your credit report. And if you see anything that's wrong or outdated, I'm going to show you how to clean it up and fix it up. Okay. All right. Let's start at the very beginning. What is credit? Okay, because again, this is one of those terms that people sometimes confuse. Credit is having that ability to be able to take out a loan to get goods and services and pay for them at a later time. Okay, it's an agreement that you make with a provider, service provider, a loan provider. It could be a bank, a credit union, any institution that's going to basically exchange something for you and where you pay at a later time. Think of credit not as debt. We're going to talk about that in a second. It is your financial references, just like you have, you know, your school references and your, you know, transcripts and all that. It's information, recorded information that tells somebody else a little bit about you by maintaining a history of how you manage your financial life, basically your credit. So do know that credit is not a right. It is a privilege. It's something that you have to earn. You do not start off with good credit. You actually start off with no credit. And it's something that you have to actively build, maintain, keep clean, and just constantly build and get it to the point where, you know, you have a great credit report, a nice thick file, you know, an excellent credit score. I just recently logged, you know, I get my score and credit report on a regular basis. And, you know, recently logged in and pulled my FICO score. FICO is one of the brands brands of credit scores out there, the one that's typically used. Pulled my credit score and I finally got that 850. It's a perfect credit score, the highest score you can get. And you know, it's really important. I was telling Deb and Brian, I'm in the process of buying a house. I'm in escrow right now. I'm closing in about 30 days. And I got to tell you, picking tile and picking curtains and flooring, that's been hard, but the mortgage process was a breeze. I just, you know, skated my way through it. And why? Because I have excellent credit, because I have taken years and years to build it. And that's what I want for you guys, is to have great credit, to be on top of it. It's not something that you turn on and kind of forget about and leave. You need to take care of it and watch it and improve it all the time. And what I would like to caution, especially young people, okay, there is this association that credit and debt are the same thing. They are not, right? Credit is your financial references. Debt is whatever amount of money you owe somebody else. So totally different things. Can they be related? Yes. You can get into debt, and you even get into debt that you can't pay out if you take out too much credit. But just because you have credit does not mean you are in debt. Very simple, you know, example is you could have, you know, several credit cards, and if you pay your bills off at the end of every single month, you have zero debt, but you still have credit. In fact, you're building credit. Generally speaking, a lot of people do need to have some debt. At some point, you know, and many of you may already have a mortgage. You may have bought a car. It's difficult to pay for these things cash up front. Okay, now if you've got the money to do so, hey, you know, more power to you. That's awesome. But many of us do need to take out a mortgage or get a loan, or, you know, to go to school. Many of us need to take out student loans and things like that. And it's okay, because that's how we can get access to, you know, the things that we have access to in this country. There are a lot of countries where there are no student loans. There are no ways to get mortgages, so we actually, we're fortunate that we have this system in place that allows people to have access to the things that they need and want, as long as they take care of it, though. You do need to be responsible about credit. Okay, so let's talk a little bit about credit reporting companies, also known as credit bureaus. You probably know them as Experian, Equifax, and TransUnion. Anybody who's my age or older might have even remembered one of them called TRW back in the day, back in the 80s, a company called TRW. That's us, by the way, that's Experian. We changed names in the 90s. We are the companies that actually collect, organize, and distribute this information. We don't create it. The information is reported to us. We clean it up, make it nice and neat, and then categorize things and make it usable. And then when a company, usually a lender or something, who has permissible purpose, and we're going to talk about that in just a second, they can have access to your credit report. They can see what's in that credit report so that they can make a decision. But do understand that you can't just willy-nilly get anybody access to somebody's credit report. Like, somebody can't just pull a credit report on you, or even a company doesn't have the right to pull your credit report. You do, by the way, you can pull your own credit report. But in order to see your credit report, lenders or other institutions, with very few exceptions, have to have something called permissible purpose. They have to have a legal reason why they are checking your credit report. And the number one reason is because you've given them that permission. So when you are applying for a loan, let's say you want to buy a car, get a credit card, and you're filling out that application, there's a little kind of, the fine print that they call it at the bottom of that application. If you read it, you will see you are giving them permission to check your credit report when you sign that paper. That's how they get permission, and they can pull your credit report, evaluate it, determine whether or not they want to give you a loan, either approve you or decline you, whatever is according to their criteria. But that's how they get that permission. That's the number one reason. Same thing when you apply for insurance, by the way, or try to get, let's say you want to rent an apartment or something like that. You are giving them permission in that application. Also utility services and things like that, cell phone and whatnot. A couple places where you don't specifically give your permission, things like court orders, subpoenas, and things along those lines. If for legal purposes they need to pull your credit report, they can. But be aware that you will know anytime anybody has pulled your credit report, because we by law have to mark anytime anyone even takes a peek at your credit report. Even if it's you, even if you pull your own credit report, and by the way, you are allowed to do that. You could do it every single day if you wanted to. It's a lot of pulling without any need, but you could. It's technically available for you to see anytime you want. That's what that last bullet here on this slide is: disclosure to the consumer. You have the right to check and look at your own credit report as often as you like. But we will record anytime anyone sees your credit report for any reason, even if it's for sending you a marketing campaign, an offer or anything like that. We will be marking that down. Okay. All right. So what is a credit report? Again, we've talked about credit. We've talked about the credit bureaus. Now we're going to talk about the credit report. And the credit report is simply a record. It's a file that contains all of your history on your accounts. Any loan you've ever taken out, any credit card you've ever taken out, all this information is included in your credit report. Now, call it it's an historic record. And what that means is even stuff that's old is still on there. Now, not forever. We are going to talk about what's called purging rules. But there is this misconception that as soon as you pay something, it should disappear. That's not how it works. This is a record. It is a living, breathing document that is growing and recording all the different types of transactions, all the different types of accounts that you have, and kind of what's going on with it. Throughout this presentation and in general, you might hear the term credit report, you might hear credit file, you might hear credit history. They all mean the same thing. Okay, it's just that long document that has all of your information. And I say long, mine is like 17 pages long. Yours, if you're new to credit, might be 1 page long. So but it is a growing living document. Okay. And the credit reporting agencies collect that information. Like I said, organize it, make it pretty, and make it, human readable, so that you and lenders can look at your credit report and make sense of what's going on with your credit history. Are you the kind of person who pays their bills on time? What kind of loans do you have? What kind of debt burden do you have? Well, how many, what's your monthly payment obligations? That's the kind of information that they get to see on your credit report. Okay. Okay. Hopefully most of you know this, but in case you're kind of new to credit, you might wonder, well, why is this even important? Why do I even care? And you're going to care because not having credit or having bad credit is very expensive. What I mean by that is when you have a poor credit score, or if you have no credit score at all, and somebody cannot evaluate you, they are going to err on the side of caution, and they're going to probably give you the worst rates if they, even approve you at all. Which means your interest rate will be higher on your loans and on your credit cards. It means that your utilities and cell phone service, they can charge you a deposit because they don't know if you're going to be making your payments on time, right? The credit report, if you had a good credit report that showed that you pay your bills on time all the time, and you're one of those very responsible people, they're like, okay, great, no problem. Let's give this person a terrific rate. No deposit needed, let's give you an excellent credit line, that sort of thing. That is why it is so important. You can be denied a loan. You can be declined certain, you can't be declined utilities, but what they're going to do is they're going to charge you a huge deposit. So you will pay one way or the other. So please note that having a good credit report and having a good credit score is one of the most important financial decisions that you can make. My son-in-law, he had, when he was very young, he had trouble because he didn't know kind of how credit reporting worked. His credit report was a mess. I worked with him, got it cleaned up. He's got a terrific credit score now. One of the things he told me in the car one day was, it was the most impactful thing that had happened to him was having a good credit score. It meant, being able to it just opened up so many doors for them. To have that. So it really is very, very important for you to know what this is, manage it, and take care of it. There are few things in the world actually that are as valuable as this, especially when it comes to finances, right? Your education and health, those are other two very important things, but boy, does this come in a close third. Okay. Hopefully many of you have seen your own credit report. If you have not seen it, I'm going to encourage you to pull your own credit report as soon as you can. I'm going to show you how to do that. But all credit reports, doesn't matter if you get it from Experian, Equifax, or TransUnion, if it comes from a credit card lender, if you see it on Credit Karma or credit.com or wherever you normally get your credit information, all credit reports, they look a little different, but they all have the same information. Okay, they have these 5 sections at least. They might have some other like credit education and some simulators and some, what if scenarios, but the base of your credit report has these 5 sections. The top part, it's called the header, the identifying information. That's the section on your credit report that has your name, your addresses. Notice I say addresses, because it not only has your current address, it'll have your previous address and probably every address you've ever had since the time you were 18, or when you first got your credit report. It's remember, this is a record, a long historic record of it. It'll have your date of birth. It'll have things like your phone number if it's been reported, your employer, your social security number, all those things that are used to identify you. Do note that lenders cannot use the information in the header to make decisions. You cannot be declined or turned down because of your age, your gender, your marital status, what part of the country you live in, anything that's called a protected class, right? Your race, anything like that, you cannot be declined. This information is there to find you so that when we're pulling your credit report, we know who you are, because you know what? There's another Deb Gossman out there somewhere. Not just the lovely lady who's on our call today. So we need to make sure we've got her credit report and not somebody else. That's what that is. So when you're checking your own credit report, you might see a lot of information. You might even see some wrong information, old information. Don't panic. This is just it's just telling you this is every single way that people have identified you, whether it's good, bad, or indifferent. My name has been misspelled in a million different ways. And I always look at it and I was like, oh, and it's just, just there so that you know how you have been identified in the past, but you do not need to freak out about this section because you cannot be declined of what's on this area. The next section, however, that's the decisioning part. It's the account information. That is where we're going to record any type of what we call a trade line, or an account that you've had. Every loan, every credit card, every, if it's reported, the utility companies, anything that's being reported to your credit report, there will be a record of it. And it'll have what type of account it is, what are the terms, how much do you owe, have you ever been late, what's the name of the company, when was the account opened, all that kind of information is in the account, in the account record. And it's going to be long. It'll start off with anything that's closed. Any account that's already been closed will be listed. For some reason, they list it at the top. I don't know why, but sometimes they'll do that. And then all your open accounts. If there is an account that has a negative thing on it, a delinquency, a late payment, it's in collections, or something really negative, that goes to the top. It doesn't mean that it's more important. It's the reason it goes to the top is because that's what a lender is looking for. They want to know, is this person a person who defaults on their loans? Is this a person who forgets to make their payments? And so they're not sorted in alphabetical order or in chronological order. They're ordered in worst to good, if you know what I mean. But that's the section you really want to go in and make sure that the information there is correct, especially if you see some sort of account that you have no idea where it came from. It might be actually your account, and maybe that loan was sold to another lender. That happens all the time. Happens in mortgages a lot. You might take out your mortgage with ABC company, and then ABC company sells it to XYZ company, and you're wondering, like, why do I have a mortgage with XYZ? That didn't happen. Usually they let you know when the loan is transferred, but just in case, always check it out in case it's fraud, in case somebody has gotten your information, got your name and address and social, and is opening accounts in your name without your permission. These are the things you want to check out, right? Fraud is a huge kind of flag that you need to identify, because I'll guarantee you that the fraudster who's opening accounts in your name is not going to be paying those bills on time. So you don't want to ruin your credit with something that it actually isn't yours. All right, the next section after the account information is called the public record section. And you only have a public record section if you have a bankruptcy or have had a bankruptcy in the past. One thing I will let you know is that recently, about maybe 3 years ago, actually a little bit more now, almost 5 years ago, all 3 credit bureaus decided to remove judgments and tax liens. So these are also court records. Imagine that you were sued, and let's say you lost that lawsuit and you have to pay, a certain amount. That would be considered a judgment that used to be on your credit report. Or if you didn't pay your taxes and they put a lien on your property, that would go on your credit report. All that information back in 2017 and 2018 was removed from the credit report. It's completely out. So at this point, the only public record that will show up on your credit report are bankruptcies, nothing else. After the public record section, if there is one, most of the time those are blank. There's a section called inquiries. Again, remember I was telling you how no matter what, anybody who looks at your credit report for any reason, you're going to see it listed here in the inquiries. And be aware that there are 2 different types of inquiries. One is called a hard inquiry, one is called a soft inquiry. And recently on credit reports, they've started dividing these because people were used to get really panicked when they'd see dozens and dozens of inquiries. But if they're all soft inquiries, it doesn't matter. These are just companies that are looking to see whether or not they want to offer you a loan. Maybe it's your own credit card company who's checking to make sure that you're doing okay financially. Maybe it's even you checking your own credit. And you will see dozens of these. And people would start panicking, oh my gosh, because they heard, oh, inquiries drive your score down. Not the soft ones. The only ones that can have an impact on your score are the hard inquiries. And a hard inquiry is logged when you give permission to a lender to check your credit for the purpose of extending you a line or a loan of some sort. Okay. So that's when they will be logged as hard, and those can have an impact. And I'll tell you, the impact is not huge. If you do a ton of inquiries in a short period of time, that could negatively affect your score, but usually not by much. It's not massive. Just be kind of aware that you don't, like if you want to open up 3 credit cards, maybe don't do them in the same month, right? Spread them out over the year. But do know that if you are applying for a mortgage loan or looking to buy a car, those are types of loans where people typically do what's called rate shopping. Rate shopping is, I want to know which company is going to give me the best rate, best interest rate. So instead of applying to one mortgage company or one automotive lending company, you apply to several, maybe 3 or 4, and you say, okay, which one of you is going to give me the best rate? And then someone's going to say, yeah, it's going to be me, and I'm going to give you the lowest rate. And you're going to go with them, right? So they're going to be the only account that you open, but the inquiries will show up on the others. And they're all hard inquiries, but they don't negatively affect your score because scoring models know this. They look for these types of loans, and when they all happen in a short period of time, let's say 30 days, right? Or usually a window of a couple of weeks to 30 days, they say, okay, this person wasn't trying to take out 5 different car loans. They were trying to get one car loan and just, apply to 5 different lenders. What they call, it's a process called deduplication. And essentially they see those groups of inquiries and they roll them up into one. Now you still see the individual so that you know exactly who was checking your credit report. And you'll see, I applied with all of those lenders. But from the scoring model standpoint, it groups all of them and it counts it as one inquiry. Okay, so do not be afraid of rate shopping. Do it. It's in your best interest, in fact, to try to get the best interest rate on a loan, especially a mortgage or an auto loan, because those are big ticket items. And even the smallest, even a fraction of 1% interest can mean a lot of money for you in the long run. So definitely do that. And then finally, at the end of every credit report are the dispute instructions. We want you to look at your credit report because we can't always tell if the information on there is perfect or if it's right or not, right? We do have rules in place that look for obvious mistakes, but there are some things that we can't catch and we simply wouldn't know. We rely on the consumer to check and say, hey, that isn't my account, or no, I was not late on that, credit card, or whatever the issue is. Just know that we do want consumers to check your credit report and report errors, but also know that there's some lag time. Okay, you might say, hey, I pulled my credit report and it still says that I have a $2,000 balance on my credit card. I paid that last week. Well, lenders don't report every single day. They report normally on a monthly cycle. So you just may be part of that cycle where they haven't updated the records yet to show that you paid that $2,000 balance on your credit card. So that's not considered an error. It's just, it takes time to kind of cycle through. But, if you've seen, hey, I've never charged $15,000 on my credit card, and certainly not last month, and that's obviously wrong, that would be something you'd want to dispute, to go in and say, take a look at this. This is not right. And then we would go back to the lender, to the bank or whatever, and say, this information is being disputed. Can you check your records and resubmit and update the records with the correct information? Okay, so it'll give you instructions on how to do that. Real quick, I do want to talk about not just what's in the credit report, but what's not in the credit report, because a lot of people believe that there's more information than actually is in there. Okay, so while we do get information from courts, from bankruptcies, as I was mentioning before, that's it. We do not have any other kind of court records. So misdemeanors, felonies, criminal records, tickets, none of that stuff is going to be in your credit history at all. Neither is your medical information. Now, if you don't pay your doctor's bill and they send that bill to collections and a year later they put it on your credit report, the bill might end up on your credit report, but the medical information, like what doctor you went to see, what was the reason, none of that is going to show up on your credit report. It has nothing to do with credit. And neither, by the way, are your transactional or buying habits. What I mean by that is your credit card bill at the end of the month, you bought $500 worth of stuff and that's your new balance on your credit card, that'll show up. But what you bought, where you bought it, all that, none of that information is on there. And by the way, neither are your bank accounts. So checking, savings, money markets, investments, CDs, anything that's your money, that does not show up on your credit report because it's not a loan. It's your money. And one of the things that I want to caution you guys about is when you have a checking account, and they say, oh, would you like a debit card for that checking account? It has maybe the Visa or MasterCard logo on it. That does not make it a credit card. That the Visa logo or the MasterCard, that's the processor. That's how the money gets transacted through that card. But it is not building credit. If you have a debit card, those are great, right? I keep one always, to pay. It's basically like a plastic check, takes money right out of your checking account. But it is not building new credit. So when you're thinking, oh, I'm using my debit card and I'm building credit, you are not. It's like writing a check, to be honest with you, or going to an ATM and taking money out and paying. So it is not building credit. You want to build credit, you actually have to get a credit card or some kind of loan. Okay. The other thing that I think surprises a lot of people is that your credit score is not in your credit report. And the reason is credit scores are calculated on the fly. They are calculated when they are needed. And there is absolutely no reason to hold on to them for any particular reason. Lenders are not allowed to make decisions based on last month's credit report. If they want to make a decision on you, whether or not they're going to offer you a loan or extend your credit or, do whatever they're going to do, and they're going to use a credit score, they have to pull your credit score at the time of decision and make their decision based on what's on your credit report right now, not what was on your credit report a year ago. So storing your credit score it's not necessary. Your credit score theoretically could change every single day. It doesn't. Honestly, credit scores are fairly stable unless something pretty significant happens. The change is going to be minimal, but it will move around. It will bounce around a little bit. You might check it one day and it'll be 720, and the next day it might be 722, and then the day before that, day after that, it might drop a little bit. That's because information is being reported every day. Different lenders are reporting and updating your credit file every day. And if something major happens, like you miss a payment or something like that, or a collection account gets put onto your account, you might see a big drop. You might see it go from, let's say, a 720 to a 650. And you're like, what happened? How did my score drop 50 points or 70 points? That's an indicator you need to go into your credit report and check out and see what the heck is going on. What is happening to your credit score, especially if you're not expecting it. If you don't understand why your credit score dropped quite a bit, go in and check your credit report. And like I said, I'm going to talk to you a little bit about that towards the end, exactly how to get your credit report. I get asked all the time, how long does that information on that credit report, how long does it stay? The good news is that the good stuff can stay on, quite frankly, indefinitely, as long as you have a credit report. As long as you're still alive and your credit report is still active and going, and you have that account that's open, it'll stay on as long as you still have that account. You'll just get reported over and over and over again every single month. Now, once an account is closed, either because it was a credit card that you closed down or they closed you for whatever reason, or you simply finish paying it. Let's say you bought a car and you finish paying it. After it's closed, it will stay on for another 10 years and then it'll drop off. So it's not forever. Now, the good news again is that negative things such as late payments, missed payments, delinquencies, derogatories, repossessions, collection accounts, charge-offs, all those negative things on your credit report, they have an expiration date. They will stay on for 7 years from the moment that the negative event happened. And then at that point, they drop off, and they drop off completely, okay? It's not like they go into this archive or anything like that. No, they are gone. They are removed, purged from the credit report completely. Collection accounts also go on 7 years, but it's not from when the collection agency reported you. It's when you defaulted on the loan, right? Well, the first time you went late on a loan that you defaulted on that went into collections, that's the starting date, not when the collection agency reports, because the collection agency can be reporting for months, for years, it doesn't matter. The clock does not reset. The day that starts the clock on a collection account is when you first went late, like 30 days late on the account that ended up in collections, that's when the clock starts, and it's 7 years from that date. Okay. I've heard a lot of people say, oh, you never want to pay your collection account because if you make a payment, it restarts the date. That is not true. That is not true at all. It absolutely makes sense to pay your collection accounts because in fact, most of the newer scoring models, if you've paid off a collection account, it's paid, even though it still shows up on your credit report, the credit score ignores it. So when it's calculating, it's grabbing your information from your credit report to calculate your score, and it sees a paid collection, it ignores it, jumps right over it and pretends it's not even there. So it is actually worthwhile if you have a collection account that's actually yours to pay it off, because it will, even though you will still see it and lenders will still see it as a paid collection account, the models won't, they ignore it. And as I was saying, bankruptcies do show up in your credit report. Bankruptcy, depending on the type of bankruptcy, whether it's a restructure of your debt or if it's what's called a discharge of your debt. Discharge basically means that your debt is wiped clean. Okay, whatever was in that bankruptcy, it's wiped out. Your balances go down to zero. If you file one of those, it's the bankruptcy and the record stays on for 10 years. So it is the most damaging thing on your credit report for sure. Or if it's the Chapter 13, which basically says if you've got all this debt, you can't pay it back, they're going to restructure it. They usually extend your loan or make your payments smaller or do something like that. Chapter 13 only stays on for 7 years. As you see here, I took out judgments and tax liens. They are gone. They used to be on for 7 to 10 years. They're gone now. And those credit inquiries, they only stay on for like 2 years. Usually around month 23, 22 or 23, we're starting to clean those out so they drop off pretty quickly. So again, don't worry too much about credit inquiries. Something I wanted to talk to you guys about, especially the younger people in the audience here. It's difficult to start your own credit report. It's hard to build it when you're young. You don't, because there's this kind of a catch-22 situation where how do you get credit if no one's willing to issue you credit because you don't have credit, right? If they check your credit report and say, hey, this person doesn't have credit, so I'm not going to give them credit. So you're stuck in this endless wheel. There are some suggestions that I'll go through about how you can start building your credit. But one of the things that we do here at Experian is a program called Experian Boost. You may have seen the commercials. They seem to be everywhere. Basically, what we're saying is not everyone reports your good payments to the bureaus. And we're specifically talking about utility companies and rental companies. So we're rental management companies. You're making your payments every single month, right? You're paying your bills, you're paying your utility, you're paying your cell phone, you're paying your rent. And these companies are notorious for not reporting that good information to the bureaus. Now, if you're ever late and you go into default, yeah, they'll report you, but they're not reporting the good stuff. They're only reporting the negative stuff. So we thought, that's not that fair. Let's make it so that you can. And through Boost, it's called consumer permission data. Basically, you're giving the bureaus permission, say, yes, go ahead and check to see that I've been making my rental payment, my utility, my cell phone payment month after month after month. And you can literally beef up your own credit report by adding this information. Now, it does have to be in your name, right? If you're on like your parents' account and they're paying it, you can't get Boost on your credit report because it's not your account. But if you are paying for your own utilities, your own rent, absolutely go check out Experian/Boost. It's totally free. There is absolutely no obligation. There's no credit check or no credit report, credit charge. Totally up to you. If you want to do it, great. If you decide 3 months later, I don't want it on there anymore, you can go back in and you can have it removed. Totally up to you to do this. You are in complete control. And I'll tell you, I've seen people who have seen 10, 15, 20 point increase in their score. It tends to work more and be more beneficial to younger people or people with thinner files. I did it and it didn't raise my score at all because I have, like I said, I've got 30 years of credit history. I've got a very thick file. So adding my cell phone, it didn't make a big difference because I already had a really good score. But people who maybe don't have great scores or are new to credit, this is a terrific way to start building that credit history up. Okay, so go check it out if that's something of interest. Like I said, no obligation, and you can remove it and undo it if you want to as well. Okay, let's talk a little bit about student loans. The reason I want to talk about student loans in particular, because we've been talking about, mortgages, auto loans, and credit cards, the typical things, is because student loans are unusual loans. They are different from any other kind of traditional credit. And that's usually because, number one, a lot of loans are federal loans, right? For federal student loans and things like that. But most loans start off in a deferred status. In other words, you take out the loan, you get the money, but you don't have to pay it back right away. Sometimes they'll say, you can take X amount of years, or while you're still in school. I think it's, at least when I was a kid, it was 6 months after you graduated or left school. Okay, that's another thing. Okay, student loans are not based on your graduation. People say, well, I never graduated from college, so I don't have to pay that loan. No, you do. This is a loan. If you took it out, you owe it. Doesn't matter whether you decided to continue with your studies. But deferred student loans are unusual in that they exist, they're there, they're on your credit report, you have an amount, but you don't owe anything yet. So think of them as sort of temporary pending status. Okay, so they don't really impact your score. They might, in this sense that if a credit model is counting the number of trades, yes, then it might help out. But for the most part, deferred student loans are in a pending status, not fully developed credit loan yet. So it's, it has very little impact on your score until they go into repayment. So after you leave school, after you're in the repayment portion of your loan, you're making your payments, then it becomes a full-fledged normal everyday loan. So if you default, it will affect your score. If you stop making your payments or you fall behind, that will affect your score. But if you make your payments on time, that will help improve your score. Forbearance is, it's kind of like when you back into repayment, but then for whatever reason, you need to go back into that kind of deferred status. Sometimes students need a break. During COVID, there was something called the administrative forbearance, right? Where people with federal student loans, they were given a break essentially from making their payments during, how many years it was. But so a forbearance trade does impact your score, because once it hits that repayment, it now becomes an active loan. Even if it goes into forbearance again, that will be just another characteristic of that loan that kind of goes into calculating your score. So it's not the same as a deferred student loan. A deferred student loan is there but doesn't impact your score. How do federal versus private loans? Honestly, they are just loans, right? It doesn't matter who actually issued the loan for you. One of the main differences that we called out federal versus private loans was mostly around the administrative forbearance that people saw during COVID, which was the federal loans were automatically, your scheduled payment was automatically set to 0. You can still make your payments, by the way, but you didn't actually owe anything. Wasn't necessarily the case with private student loans. Those were still just regular loans that you would have owed. You could have gotten what's called an accommodation, but you had to talk to your lender. It wasn't an automatic thing. I don't know how it's kind of most what we call COVID accommodations or CARES Act accommodations have been phasing out. But there are still a few things that are going on with loans. Like you might have heard of something called the reset, the student loan reset. And essentially what that is let's say you had a loan, you stopped paying on it, you were very, very delinquent on it, or maybe even defaulted on the loan. The reset basically said, we still owe the debt. We're not forgiving the debt, but we're going to set you back to being in a good status. So we're going to set you back to current. And now you can start paying your loan instead of having all that negative stuff on there. They basically brought your existing loan back to a current status as opposed to a delinquent status, but you still owe the money, which is different than a forgiveness. So there are some loan forgiveness programs out there, sometimes based on what your major is and where you work and that sort of thing. And of course, the federal forgiveness program, which I think is still pending, I believe, but that would actually say, no, you don't actually owe that amount or a portion of the loan, right? That they're actually, your balance isn't that entire amount anymore. That is loan forgiveness, which is completely different. Okay, and then do know that loan default There are some characteristics about those, student loan defaults. It's not a good thing. You definitely want to make sure that you pay this because those aren't like the forgivable kind. You can't wrap that into a bankruptcy, for example. If you took out federal student loans, you're going to pay that loan one way or the other, okay? This I'm going to give you mostly just so that you have it for, for reference, but it's actually in the credit report information that you're going to have when you have this this presentation. To initiate a dispute, right? You check your credit report. Oh, you find something that's not quite right. There are many ways that you can dispute that information. You can call Experian directly, or any of the bureaus actually. You can call your lender directly and get that resolved. There are many different ways to do it, but honestly, one of the easiest ways is just to go online, get your credit report, see what it is that you want to dispute, go online and do it. You can do it by phone, you can do it by mail if you so want. That just takes longer. It's tedious in my opinion. Whereas online, you can pretty much fix or report anything that's inconsistent or incorrect right away. Some things can be fixed right away. You say, hey, look, that's not my address. This is my address. That's an easy fix. Usually within a few days, I notify you, yep, your address has been updated or your name has been corrected or whatever the problem was and those things. If it's an issue with a lender, something that we have to kind of go and confirm back with the lender whether or not that information is correct or not and have them update their records and send us the correct information, that can take up to 30 to 40 days, okay? So it doesn't happen instantly, but we will reach out to the lender, we will work through them, we will require them to submit the right information if they made a mistake and they submitted the wrong information. So it does take a little time, but we'll notify you when that information has either been resolved, either in your favor or not in your favor. Sometimes it doesn't, right? Sometimes they can actually prove that, yes, you were actually late or whatever that was. And in that case, if you want to put a note in your credit report, you can do that. It's called a consumer statement, and you can put your side of the story, right? Give your side, maybe you were late because of some, maybe you were sick, you lost your job, whatever you want to put on there, you can add that, a consumer statement to your credit report. Okay, other things that, I'm not going to go into too great of detail, but just be aware that they exist. If you were the victim of fraud, and by the way, just so that you know, fraud occurs mostly none. Most fraud that happens, credit fraud, is not, the hacker in Russia or some, faraway country. Number one fraud is actually perpetrated probably by somebody you know very, very well. It could be a family member, it could be a friend, something like that. So just be cautious and be aware. They're the ones that have easy access to your personal information. But do be aware that your credit information, your name, address, social security number, all that, it's out there. There are so many data breaches that happen. It doesn't mean that you are, you just throw your hands up and say, oh, well, there's nothing I can do. You can actually still protect yourself, but don't be naive in thinking that your information is completely and totally private and nobody knows anything about it. It is out there. I guarantee you that now on the dark web, all of our information is out there. But you can protect yourself. And the way you protect yourself is you check your credit report often. And we're going to make it so easy so that you can, and make sure that nobody's using your credit to open up fraudulent accounts or anything like that. Okay, so just be aware that monitoring your own credit report is very, very important. I'm going to show you how you can do that for free. Okay. If you were the victim of fraud and you're resolving it or have resolved it, you are permitted to put something called a fraud alert on your credit report. And that's something that lets lenders know that you were a victim of fraud. You can put a note that says, anybody who's checking my credit, you can automatically have it stopped and say, in order to process this credit request, you have to call my cell phone number, right? That way you are notified instantly if somebody's trying to take out, credit in your name. You can put what's called a credit freeze, where essentially anybody who tries to check your credit, we're going to respond, nope, sorry, this account has been frozen. If you want to, you can put a freeze, but let's say you do want to take out a credit card, you can do what's called a thaw, a temporary credit thaw. And it's where you take your credit report that's frozen and for a day, for example, or for a period of time, you can unfreeze it. So let's say you want to buy a house and you know that mortgage companies are going to be checking your credit. You might, let's say, thaw your credit report for a week while you're taking care of that. And then you can freeze it again so that nobody can check your credit report during that time. So those are things that are available to you. Do be aware that there's a lot of companies out there called credit repair companies, not credit reporting companies, credit repair companies. And quite frankly, they don't do or can't do anything that you can't do. All they are doing is charging you an extraordinarily high amount to do disputes. And you can do those for free online very easily through the websites, through your lender, or through any of the bureaus. So, you know, and they charge you like thousands of dollars to do the exact same thing. That's really not worth it. Oh, let's see here. Okay, I'm going to go really quickly into a credit score because most of you guys know what a credit score is, right? It's your FICO score, your Vantage score, whatever. A couple points that I want to make on that is that there is no one single credit score. You can't say, oh, my credit score is this. It's a credit score that's based off an Experian credit report, Equifax, TransUnion. It could be the FICO score. It could be the Vantage score. Even the FICO score, it could be FICO 2, FICO 4, FICO 8, FICO 10. It could be the FICO 4 mortgage model, the FICO 4 brain card model. There are dozens and dozens and dozens of scores out there. So there's no one. That's why you say, well, wait a minute, how can my score be 720 and 750? That doesn't make sense. Different algorithms, different models that are calculating your score. So don't worry about that. Just look at the score that you are being presented with, that your lender is actually using at that time, and look to see how you can improve that one. You might say, well, if they're all different, how do you do that? How do you fix your credit score? You do that, let's see here. Okay, here we go. You do that with something called risk factors or score factors. Anytime you get your credit report, they'll give you the score. Let's say they say, oh, your score is 650. Okay, that's your credit score. And then next to it's going to give you 4 reasons why that score isn't higher. What were some negative things that were affecting your score, driving it down? And by the way, it's not usually a humongous driving down. It can be something very small. And if you have a really, really good score, some of those reasons may not even make sense. It's just relative to what is impacting your score. But by looking at these risk factors, these score factors that are being presented with your credit score, it gives you some idea of what is it that you need to do to help improve your score. Because there's 4 of them, sometimes 5, and the 4 will be in order of importance, and it will tell you what is it that's affecting it. It could be something like you just don't have enough credit history. That's something that, you know, over the years that eventually falls off. By the way, 11 years is the average age. So if you have less than 10 years of credit history, you're still considered a newbie in the credit world. So you might see that don't have enough credit history or not a long enough credit history for at least 10 years. But it could be things like, you know, your balances are a bit high, your utilization, how much of your credit line have you used up? Maybe you have a lot of inquiries. Maybe you have a late payment. Maybe you forgot to pay your gym membership and they sent you to collections. You have a collections account. Any of those things that are driving down your score will be listed here. It's just a way for you to know what it is that you need to address. Okay. The models, I'm just giving you one of the models that we have out there, Vantage Score 3.0. It's very typical of a credit score. The most important thing that's impacting your score is your payment history, whether or not you are paying on time. What this means is if you were late, even accidentally late 30 days, and you made your payment, oh gosh, I forgot I made your payment. Yes, now it's paid on time, but the late payment doesn't go away. It goes away in 7 years, but it still stays on there that you were late before. So try not to be late ever. Set your payments even up on automatic payments so that you don't even accidentally forget to make your payment. But one of the things I wanted to show you is that yes, 40% of the credit reports, the impact is based on payment history. But as you can see, it's not the only thing that affects your score. So yes, making your payments is super important, but also keeping your balances down, keeping your utilization below 30%, right? That's how much of your credit line have you been using? Try below 30% and you'll be okay. Depth of credit, what that means is have a variety of different types of accounts. Have some installment loans, student loans, auto loans, credit cards, it's a great thing to have on your credit report is a mortgage, right? It really helps jump up your score. Have a variety of different things. Okay, a couple things, just, we talked about almost all of this. It's very important for you to establish your credit report, always super important to pay your bills as agreed. Trick here is you should always have at least one credit card, more if you can manage it, but having a credit card is very important for lenders to see how you manage money. An installment loan is a good thing to have, but they're really looking for a revolving term so they can see kind of what your credit behavior patterns are. Don't open too many accounts all in a small period of time, and don't close a lot of accounts in a small period of time. Every time you close your account, especially if it's a revolving type of an account, like a credit card or a line of credit, you are affecting your utilization, that balance to limit ratio. That's very important. So just be careful and think through it. And also be aware that if you don't use a credit card in at least around 2 years, the lender will close that account for you. And that's not a good thing, because it'll affect it could negatively impact your score without you having done anything. So just every so often use your card and they'll keep you open. Okay, if you want to get your credit report right now, you can go to annualcreditreport.com. That's a website where the 3 bureaus get together and we can basically issue you your free credit report. It used to be one per year for free. Through the end of this year, because of COVID and whatnot, we made that you can get one free credit report every week if you wanted to from each of the bureaus. So take advantage of it. Just go to annualcreditreport.com and pull your credit report. They'll ask you some questions to make sure that it's you. And if you can answer the answers correctly, you will get your credit report right there online. Do note, though, that on annualcreditreport.com, they will offer you a credit score. That is not free. They charge you for that credit report. If you want a truly free credit report and credit score, like a FICO score, you can go to Experian.com, and we have a totally free credit monitoring service that allows you to check your credit report, to monitor your credit report. So we'll send you alerts if somebody's looking at your credit or somebody's trying to take out credit in your name or whatever. And it's totally free. I mean, completely free. There are upgrades if you want, but for the most part, it's a terrific program. You can get your FICO score, your credit report, and it's a really good way for you to really learn and keep on top of your credit. And again, totally free, so please take advantage of that. And also, there is so much more information than I can even begin to cover here. So I'm going to give you some links here to different websites. Most of them are from Experian. They are reputable and they have the right information. Be aware that not all the information that's on the internet is actually true. Yeah, there's Deb. Hi, Deb.
Hey there, Veronica. Great job. I do have a couple questions for you before we end up here.
Yeah.
One that came through was, would an international credit card and loans affect the credit score?
Only if that company also reports to one of the 3 bureaus. Most international companies do not, but some might. So it's only if they report to the US Bureau.
Okay, great. And then, do student loans, whether they're in or out of payment status, impact the credit scores when you're purchasing a home?
If they're in deferred status, they do not. And if they are in repayment, they do.
Okay, good. And then this is a question that came up. I am considering the new buy now, pay later program that's being offered by several different entities. What should I be aware of before I sign on for this type of program?
Be aware that they do not report to the bureaus, although they are going to start pretty soon. However, they are excluded completely from existing scoring models. So while it will show up, and you don't want to be late or to default, because then they won't issue you those loans anymore, it will not affect your score. Not now. Will that change in the future? Yes, it absolutely will. It is a new type of loan, but it is fast becoming mainstream. And at some point, it will become just like any other loan. Okay, but for right now, they do not impact your credit scores. They just probably, I would say, in a few months, you're going to start seeing it show up on your credit report. But there'll even be a note there that says this trade does not impact your score.
And then one last question, because I know we've hit our time here,
Mhm.
is should I put a credit freeze on my underage children?
You don't have to, unless you feel that they are at risk. Okay, if you feel like they could be at risk, you can. We will not, none of the bureaus will create a credit report for anyone under 18. However, sometimes we don't know that they are under 18. So if there is a risk, you think, oh, there might have been somebody or a family member, somebody that could have done something, absolutely go ahead and check it out. Go to the Experian, go to all 3 bureaus' websites and find out how you can monitor your own child's credit report and make sure that no one is trying to take out loans in their name.
Brian, is there anything else you'd like to add?
Just would like to say thank you so much to Veronica for sharing all of your knowledge and expertise with us today. You're a fabulous partner to us, and we thank you so much. And thank you, Deb, too, for being our monitor and connecting us with Veronica. And just to let everyone know, we did record today's session. There was a lot of good information, so some of us might want to come back and review some of it again. And we'll also be sharing a copy of the slide deck with everyone as well. So look out for an email from us. And we might be doing something this spring where we do a second session and delve into 1 or 2 of these topics a little bit deeper. So if that interests you, let us know, especially if you have a particular topic you'd like for us to explore. So thanks again, Veronica and Deb, and everyone, please have a good day. And thanks for joining us.
Thank you so much.